Welcome to another episode of the Real Estate of Things podcast. I'm your host, Dalton Elliott, joined today by my good friend, Evan Einhorn. Evan, thank you for joining.
Hey, thanks for having me on. I appreciate it. So,
For sure. So I'm excited to have you on the podcast. One um, area that we haven't touched on in the podcast, and it kind of blows my mind as I sit here today, knowing that we've been on for almost a year and a half. We haven't touched in the mortgage broker side of the business. My quick background really started in the mortgage broker side. I started at Lima One Capital right out of college, was an underwriter and credit analyst for 5 months, and then was tasked with building out a mortgage broker sales channel. Right. So of my 8 years here, at least 6 of those years were spent building, growing that channel from zero up to a few hundred million a year in production in our BPL space, and a full dedicated team we have here. And so I've worked on the retail side of the business, the correspondent, table funding, whole loan purchase, but my heart always remains with the broker side of the business. It's the most fun, in my opinion. Love the mortgage broker community, and happy to have you here today. So give
yeah.
the audience and I just some quick background on your progression and how you landed where you are today.
Yeah, well, I appreciate that because I think the broker side is the most fun too. Um, I got started in real estate in 2010. I was a real estate agent for a few years, became a loan officer in 2013, and then in 2018, I decided, hey, I think brokers is where it's at. We can get the consumers the most options, competitive pricing, all that kind of stuff. So opened Modern Home Lending, and last couple of years I've been top 100 mortgage broker loan officer in the nation, which is kind of cool. And a mortgage broker, that term is overused. I think a lot of people just call themselves a mortgage broker, even though they're just at one company. But as a mortgage broker, we have over 30 lenders. Last year I used 14 different lenders. So, if we come across a veteran looking for a VA loan, obviously looking to send it one place. If we have a hard private money loan that fits Lima, we're sending it to you guys. So that's where we really come in. And then last year I also started, I'm the co-founder of Find Wholesale Lenders, which basically helps educate brokers on different loan programs and different lenders out there. Because not every broker does a good job at brokering. I mean, they might be new to the space. There's a big transition of people moving from the big banks to becoming mortgage brokers. So that's my goal, to help with that transition.
Yeah, it is. In my years being attached to the hip with brokers, that is one of the bigger pain points, especially for newer folks coming in. But as you do more deals, you have wider options of lenders, and it's a double-edged sword, right? Like more
Yep.
options is always great, but also logistically, you have a couple pieces of how do I develop a streamlined process, knowing that I have a bunch of lender relationships. How do you manage that within your business? You said you work with 30 or so lenders and closed with about half of that number last year. How do you keep a high level of efficiency while also making sure you have a wide breadth of options to go to?
Yeah, I think, not to toot our own horn, but we are Modern Home Lending, so we like to be more modern than the average
Yeah.
person. And I think the mortgage industry is way behind its times as far as tech goes. So one, I would say the number one key factor for any broker is just being proactive. So being proactive about signing up with lenders that you might not have a deal today, but hey, someone next week could come asking, for that specific type of loan or that specific type of product. And then two, also learning about those products, and that kind of brings in the Find Wholesale Lender project that we were working on, just to basically help brokers learn quicker. And then it also comes down to systems. So, we have several loan officers on our team that when anyone submits a loan, we try to take, we break it down in the process, and we try to, not to get too in depth, but we actually build like conditional logic. Like, hey, if we're going to send a loan to this lender, we have a templated form that breaks down the process for that lender for the borrower. And that helps it because that way we don't have to remember it. We kind of break it down up front of if we're going with this lender, here's what the steps will be. If we're going with this lender, but it is a lot, and I do know a lot of brokers that, only use one, two, three lenders. We use a ton because there are, there's good situations, whether it comes to pricing or a specific product, that it makes sense. So,
So how, without diving into
yeah,
too much depth,
yeah.
how do you, across those 14 lenders, is it relatively evenly dispersed, or is it, a 80-20 rule? How do you find your volume flows through that number of lenders?
Yeah, I mean, it's, I would say about five lenders have about 90% of our business.
Got it.
So, and then the others are more one-offs for unique programs. Part of that is because as you grow with productions, these lenders will give you better pricing, so the more you send to them. And we always tell our clients we're looking for the best value. So we're not looking necessarily always for the best price. We're not
Mhm.
looking necessarily for the easiest process. We're looking for the best value. So if someone comes to me and they say, "Hey, we're competing with multiple offers," which has happened a lot during COVID. We want to close as soon as possible. I might say, "Hey, we have a lender that can close in 15 days. They're quarter higher in rate, but that makes sense for your situation." So again,
Mhm.
us being the middleman, us knowing what to do. Um, if you're always going with the least expensive lender, they may or may not be the best service at that time. So, we'll weigh that if it's a purchase or a refinance. If we have a 30-day purchase, we don't want to risk anyone's home purchase, for a lender that might not have the best service. But if it makes the deal work on a refinance, and those are the conversations that we talk very high level with clients, letting them know, hey, we're going to find the best value, and for this specific situation, this is what we're looking at. But it definitely comes with experience and it comes with community. So always making sure you're in touch with other mortgage brokers, in touch with the community. And, if lenders are doing an amazing job, we like to promote that. Or lenders are struggling because they're maybe a little backed up. Obviously share that so other brokers are aware.
Yeah, and that five or so lender box seems to be the sweet spot in that you can develop some good working capital, not capital in the sense of dollars and cents, but just like good working relationship capital with a handful of lenders, and that's to your point, like that's meaningful, especially you call in a favor here or there, and they're just more efficiently ingrained within their process, and just able to operate more effectively. If you're just shooting from the hip on every single deal, that's a nightmare from a process standpoint. You're not really building capital. So, you look at COVID, you look at the recent environment and changes like that capital with lenders really helps. Like you have a client broker relationship, but then there's also a broker lender relationship,
Right.
right? And
Right.
like you said, like there are benefits that come a lot of times that flow through to the client. On our side of the fence, we give preferential pricing to some folks with significant volume, and that helps both parties. It helps the broker, helps the retail client. So big positives there. What Switching gears a little bit, here we are beginning of 2023. What are some of the biggest challenges you see this year as a broker, knowing that rates going up last year? It seems like everybody's pretty used to rates being all across the board and moving up, even though we've had some slight relief lately, which has been nice. I saw the first rate reduction email in what seemed like ages from our credit and capital markets team.
Yeah.
They're jumping for joy on the fourth floor. But knowing that probably the story of last year was rates, what do you envision kind of the story for this year? Is it just maintain course, or what are you looking to?
Honestly, I think it's just getting over fears, looking at
Yeah.
deals, specific deals. because I felt, a lot of consumers, brokers, professionals, everyone, October, November, December was scared, and then all of a sudden, and it's different with an investor versus a first-time home buyer, but we've had a lot of people get off the fence just in January. With rates being a little lower, we kind of made it through the holiday season, and you know, for an investor, if that deal makes sense for them, and they're buying something under market value because maybe they have an off-market deal, you know, take it. It doesn't matter what the market's doing. If you have something under market, you know,
Mhm.
great. If you're a first-time home buyer and that monthly payment makes sense and you're going to be there and that's your home for a while, great. So I think that's the big thing is people are tired of waiting for the market to crash. I hear that all the
Yeah.
time that, hey, we're waiting for the market to crash and people are tired of waiting. And it's kind of nice that, we've seen companies like you drop rates and also on the residential, just standard conventional side, rates have been slowly dropping since early November as well. So that's kind of given some breathing room. I do think if that continues, we'll have a healthy market and we'll be able to crush some of the fears. If rates go up, so a lot will depend on rates because people do definitely get payment shock.
Yeah, that's a good point too. That people waiting for the bottom, and it's everybody's always trying to read the tea leaves, and it feels like the Q4 of last year, the beginning of this year, that we've kind of leveled out, and hopefully the worst is where we are now, which would be, I think, a good worst case scenario. But it seems like people have increasingly given up hope on there being some precipitous drop
Right.
off the edge of the cliff, and I think it just seems to me like a healthy realignment. Like, of course, everybody in this space wants everything to go up and to the right, but if you know, if you spend 2 minutes reading about just as high level as you can about the U.S. real estate market, like that's just not the way it works. You go
And
up, go down a little bit, go up, go down.
and I think it's very like people put too many generalized statements out there of, hey,
Mhm.
this market is going to go down this much, or this market's going to stay steady, or this market's going to go up. I give the example, I've in one community that I own in Arizona, different floor plans literally have gone up or down more than 10% difference, over time, just because that floor plan gets, so it's so hyper local. So I think it's important that you work with local professionals to really understand that local market, what's going on there, and the future of that market. So that's what we do.
Yeah, super. Yeah, really, really good point. Is that you can look at national headlines or click on CNBC or whatever, and it's yes, it matters, but then it really doesn't matter for any individual investor really at all, unless you have like broad exposure to the entire real estate via securities. Like it doesn't.
Right.
What's happening on the broad scale doesn't matter. It's like what's happening in your market. It's all by nature hyper local. So um, yeah, and you're seeing like what you think you would see, which is the markets that were just absolutely wildly hot, Austin, or really Texas as a whole, and so
We're
many
based we're
others
based
that
in we're
were
based
just
in Phoenix, Arizona. So we definitely saw a decent price reduction in some areas, not all though. So
all right, Evan. As we look to close down this episode, I want to throw a super high level question to you,
okay.
and you've seen this really the market from the last few years from kind of a newer entrant into the space, over the last decade or so, up to someone who is again at the top of the pyramid. So, what advice, what insight would you give kind of a new entrant into the broker space today? And conversely, on the other side of the spectrum, what would you give to some of your old warhorse colleagues who have been in this space for a while? Yeah, what golden nuggets can you impart upon the crew?
Well, that's a good question because with the market shift, I mean, I keep saying it's anyone's game, for the next couple of years. We have someone that just joined our team, just got licensed a couple months ago. They submitted 2 deals in the last 2 weeks, which is amazing and better than average. And then unfortunately, we've also seen some veterans in the industry not willing to change. you know? So I would say for the newbies in the industry, don't even, you know, don't even worry about what market. And yes, we're way slower than we were the last couple of years, but who cares? This is the only market, you know. So education, I think, is big, you know, and that's, you know, we have tons of education at findwholesalelenders.com. That's why we created it for brokers. Um,
Mhm.
Learning and, you know, for the new guys, it's, you know, when you're a broker or mortgage professional or even a real estate professional, if you want to work full time in the US, that's 40 hours a week. What are you going to do with that 40 hours a week? So I think that the biggest thing is like, you know, if you don't have any deals, what are you going to do to actually market and educate? We're huge on, I don't consider myself a salesperson. We literally help advise clients and educate clients. And I think that makes it easy for you. So what are you going to do 40 hours a week to get out there and get business? We can talk for hours on how to actually get business, but you know, what are you going to do with your 40 hours a week? Do you have a plan? Or are you just sitting kind of behind your computer screen, you know, checking your email and hitting refresh? And
Yep.
then
No,
for the yeah, go ahead.
yeah, no, no, sage advice. And we look at it similarly from a lender standpoint. Whenever you have a little more time on your hands, and you're not worrying about breaking record after record month, like how do you sharpen the blade? How do you get better? How do you optimize your day? For us, it's really tech heavy too. Is using these times whenever we're not having record breaking production all the time to say, like, how can we retool these things? It's much easier to do that whenever, for us, when you're doing, something less than, 300 million a month, which is kind of the pre-rate increase norm. But we'll all get back to it. And like you and I talked about here, if this is the darkest, as my motion sensor lights go off as I say that. If this is the darkest it gets, we'll be okay. We'll be all right. For just one more time, you have so many resources available for folks who are looking, like you said, to buy a home themselves for personal use, for investors, and for brokers. So you really touch all the bases in the real estate space. Give me one more quick rundown of where people can find you.
Yeah, so my residential brokerage, modernhomelending.com, you can find me, Evan Einhorn there. Also on Instagram at Evan Einhorn. You can find me on Facebook, Evan Einhorn. There's only two of us, so I'm the one on mortgages. And then, you know, findwholesalelenders.com. You know, there's great resources there. I'm one of the couple people that manage it and found it, so you can always get in touch with us there as well. So, yeah,
Beautiful,
I
beautiful.
appreciate it.
Evan, you're traveling, and I can't thank you enough for taking time out of your day to record this with me. Wish you and the team the best. It's incredible to hear about your trajectory and how quickly you've scaled up to the top. I definitely encourage anybody who's listening, whether you're an investor, whether you're just looking for a home to buy yourself for personal use, mortgage broker, like hit up Evan and the team, use these resources, uh, keep on climbing to the top. So thank you again, Evan.
Well, thanks, Dalton, for having me. And for everyone out there, the resources are definitely out there. You just got to go get them. So appreciate it.
For sure. Thanks, Evan. Thank you all for listening. Take care.